All right, welcome everyone to 2026 Investors Performance Group meeting. Can't believe it's already 2026 and we are kicking things off already with what is going on for you guys to know here into the new year. I think 2026 is going to be a great year for investors who really think about it and take advantage strategically. And we're going to be going through the market, obviously, like we normally do. We're going to be having a fireside chat with Kelly Fry, asking her what her opinion is going to be on the market. Also, we're going to go through some pretty hot deals out there because we're finding some really interesting things. Like we're talking like pre-pandemic level investment opportunities here in the lower mainland. So I'm excited. I hope you guys are excited. As you guys are joining into the live stream, I would love for you guys to drop it into the chat on the side, which I believe would be on this side of when you guys are watching me. Let me know where you guys are tuning in from. And again, get your questions ready for the fireside chat with Kelly because we want to make this as interactive as possible for you guys so you can get the most out of today's IPG meeting. Again, thank you guys so much for joining. We're going to pop open the slides right now, and here we go. All right. So, again, this is the Investors Performance Group meeting. We meet every single month online here on YouTube for now. And we're going to be putting some special events potentially together this year as well. If you guys are interested for some live events as well. So, guys, make sure you guys let us know. But let's kick things off. Obviously, the Kelly Fry team is IPG is brought to you by the Kelly Fry team. We are a full service real estate investment team here in the lower mainland. We have everything that you need to be successful with your investment strategies, building your portfolios from really top tier mortgage brokers that can help you get creative with financing, great home inspectors, contractors if you're looking to do fix and flips, accountants and lawyers who can help you with your structures. Anything you need, we will help put you in touch with the right people for your power team. All right. So today's agenda, we are going to do our regular market deep dive. We're going to be talking about how 2025 ended, essentially, what we're feeling out there in the market. Then we're going to have that fireside chat with Kelly and I. We are going to be talking what we are seeing out there in the market heading into 2026, some predictions that we have. And again, I would love for you guys to start dropping your questions early into the chat, and we're going to get to them as many of them as possible. And then we've got two really smoking hot deals for you guys in the detached market that we have found one in Surrey and one over in Mission. So let's dive right into our market deep dive. Let's go. Of course, we do love engagement with you guys, so feel free to take photos of your screen that you guys are watching. Tag the Kelly Fry team. You can also tag me. I will post my Instagram in the comments right now as well. It's at Cameron E. Manning on Instagram, and you can check me out on Facebook as well. Tag us. Would love to know what your biggest takeaways are, your biggest ahas are, and let's dive in. All right, market update. Here we go. So, what's been going on in the market? Well, according to Greater Vancouver, home sales in Metro Vancouver finished the year down 10%, marking the lowest annual sales total in over 20 years. I can tell you with boots on the ground, it was a very, very slow year all throughout 2025. We had blips here and there where we saw a little bit of activity, but overall, a lot of listings were sitting on the market. Not a lot of sales were happening. A lot of buyers weren't taking a lot of action. And according to the Fraser Valley Real Estate Board, decade high inventory and softer prices failed to spark buyer demand in the Fraser Valley in 2025, making it one of the slowest years for sales in decades. So even though prices have come down, even though interest rates are back down to near pre-pandemic levels as well, we didn't see that spark the buyer demand. And obviously, a lot of other factors factor into that, right? Obviously, we have situations where people are watching what's happening between US and Canada relationships. We've got economic situations. There's lots of things that buyers are watching that maybe had them sitting back and saying, I still want to wait a little bit. Maybe the market's going to come down a little bit further. Maybe it won't. I'm not ready to take any action. We definitely felt that through 2025, although we are starting to see a little bit of a different story in 2026. And we'll talk a little bit more about that with Kelly in the fireside chat. All right. So, as with always, we like to look at what's going on with the inventory. Now, here is where in 2026, especially at the beginning of this year, we're likely going to see a little bit of activity start to happen because as you can see here, the numbers have really started to drop on the inventory, but that is classic of December, right? We saw inventory through the fall start to drop, specifically heavier here in Greater Vancouver. Fraser Valley took a bit of a drop and actually was up in the inventory in the Chilliwack area through into December. Now, this is going to be a traditional trend that we're going to see from December, January, a little bit into February. Then then we're going to hit that spring market. And as you can see here in the past years, we can see the trajectory that we had through the spring market right here, where we're going to see a big spike in that inventory. So be aware of that, that if you guys are planning on selling, now's probably the time to put your home on the market when there's less competition out there, because we know in the springtime we're going to see a huge spike in the inventory, causing a lot more competition against sellers for the buyer's eyes. Now, again, we're going to look at the relationship with sales, though, and we can see here the sales absolutely plummeted through the fall. So this is what we were talking about when it comes to the record level low in sales in both Greater Vancouver and, of course, Fraser Valley. In Greater Vancouver, we saw that there was only 1,529 sales for the month of December, but we saw over 11,000 listings on the market. Only 837 sales in Fraser Valley and only 135 in the Chilliwack District. So right now, when you have low sales and higher inventory, even though the inventory has come down, that's going to put some downward pressure on the prices, which we've already been seeing throughout 2025. That's likely going to continue due to what we're seeing right here. Now, obviously, we want to look at that. What's that relationship been? And as you can see here, that downward pressure has really started, especially in the Greater Vancouver area, down to an average of 1,192. So we're under the 1.2 mark now for an average sales price across GVR. Fraser Valley is now sitting at just slightly over $1 million. They're on the cusp, if that downward pressure continues, to drop below an average of $1 million. And you can see there, Chilliwack District is now just under $760,000 on an average. Now, again, we do look at the fact that this is an average across all cities, across all neighborhoods, and across all market segments. We are going to do a little bit of a deeper dive as we go into it to really extract what's happening in different markets out there. But this is just a general idea of where it shows the relationship essentially between the sales and the inventory that we have on the market and that pressure that's being built on the prices. Now, of course, we do want to look at the average sales to active ratio. Now, the good news here is that in December, we actually pushed it up a little bit back into a balanced market. So as you can see here, most of the markets are sitting around 13.3 to 13.5%. It's actually kind of funny to look as they all kind of converged onto that one point there. But the good news is we are moving back upwards overall because inventory is dropping and we're still maintaining low sales, but that low sales is absorbing some of that inventory. We are pushing back into that balanced market as we head into 2026. So that's a nice thing to see if you are thinking about selling a home right now, because the closer into that balanced market, there's a higher chance you'll actually be successful at selling. Not necessarily that you're going to sell for the highest price possible. You might still have to negotiate quite a bit, but you are going to see that there's going to be a little bit quicker sales that might be happening if this trend continues through into the year. Just to answer, will this live be saved? Yes. As soon as we end the live, it will continue to appear here on the Cameraman and YouTube channel. You guys just have to go to the live tab. And if you do want to watch any of our past episodes as well, just go to that live tab. All of them will be there. If you're not already subscribed to the channel and you're looking right below and you see that red button that says subscribe, do me a favor, hit that subscribe button so that way you guys know where to come back to catch all these replays afterwards. Or if you want to share this with someone, a partner, a JV partner, or anyone that you want to make sure that they know what's going on, you can do that as well. All right, one of the other metrics that we've been paying close attention to through 2025 is the percentage of original price. Now, as you can see here, this is the relationship between what something was listed at versus what it is actually sold at. So when people are trying to determine, if I list my property at X, what is it realistically going to sell for? This is where it's been averaging. So in and around the 94% of list is where most properties are selling. Now, obviously, this being an average means that some properties are selling below 94%. Some properties are still selling closer to list price. However, this is a good gauge as an investor that we could be thinking about if we know that an area is averaging around that 93 to 94%, and we're able to get anything lower than that on the market, let's say we put an offer and we can lock something down at 90 or 91%, we're likely doing better than the average market. And you could actually be making some money on the buy. Now, again, this is not an exact science, but it is just one more metric that we can use to identify where an area is selling. Some areas here in the lower mainland are still selling around that 98% because they're a higher demand area regardless of the market. So if you were to get something at 96% of the average list, you're actually doing better than the average in the area, likely buying with some money on the buy, which we all love as investors. So now these are the averages across the boards, right? We use these as a general guide to tell us what's going on in the market. But as I have said time and time again, there is no such thing as a Canadian real estate market. In fact, there's no such thing as a Vancouver market or a Surrey market because every single market has so many sub markets. They're down to the sub areas. You've got, let's say, Wally versus Cloverdale versus South Surrey. And even within that, you've got areas of Wally versus other areas of Wally that might be better, north versus south. Then you've got the different market segments between is it a detached property to a townhouse to a condo? And even when in that area, we can go as granular as saying, what's the difference between, let's say, a one bedroom versus a two-bedroom property, right? So we're going to do a little bit of a deeper dive into those metrics so we can get an idea of where different cities are, different markets are sitting, so you guys can start to get an idea what to pay attention to going into 2026. So we're going to start further out. We're going to start out in Chilliwack today. Now, the interesting thing about Chilliwack, last December, I guess Chilliwack had taken a bit of a bigger hit because this year it is showing that the detached market in that area is actually up 8.4%. So while we did talk about prices are kind of being pushed down comparative to last year, no overall prices are down in Chilliwack, but we're still up 8.4% as an average over last year. However, days on market are up to an average of 61 days. So it's taking approximately 2 months on average to sell a property right now, which means to me, there's a lot of properties that are probably taking even longer out there. And as investors, we need to recognize that days on market is the enemy of a seller's value, meaning the longer the days on market, if they are way above this average, that's an opportunity for you to do a little bit more harder negotiating. And again, make your money on the buy, right? This is where we start being strategic. We got to think about these things as investors. Inventory is up 12.9% to 201 listings in the detached market. However, the same cannot be said for townhouses and condos. Townhouses are down over last year 11.5%. That's a massive drop, and condos even further down 18.2%. Days on market for a townhouse is sitting at 42, about a month and a half, just under a month and a half, and 61 days also for the condos. Inventory has climbed in the townhouse market, but it has actually contracted a little bit in the condo market, down 11.8%. So if we continue to see that inventory drop in the condos, we might see that pricing level out in that area. All right, Abbotsford here. Abbotsford took it on the chin when it comes to the detached market comparatively to last year, down 20.3% for an average of $1.2 million right now. Average days on market are sitting at 54 days, and you've got inventory drop of about 3.7%, 394 detached properties on the market. Townhouses actually saw a little bit of growth, so 3.5%. So that's that tail of multiple markets. Townhouses are faring a little stronger in the Abbotsford market, although the days on market have jumped up significantly to 74 days on market as an average. So we may see that story also start to change if that days on market lasts longer and inventory continues to rise, which is up to almost 30% at 20.8.7. Condos are down just under 10%. We didn't get an average days on market, which means that nothing actually sold in the month of December in the condo market. But we did see that we took a lot more listings, 9.4% increase. So we'll probably see a little bit more pressure on the condo market as well. Okay, out in the Mission market, Mission is down about 7%. They're still averaging slightly over 1,050,000. Their days on market are sitting at around 70 days on market and 309 listings in detached right now. Honestly, Mission's always been one of our, favorite investor markets out there. And with that inventory increasing to over 309, there's a lot more choice that investors will have looking in that market if you're looking for cash flowing deals. And we are going to feature one today that's out there that's pretty decent. Townhouses are up though 9.1%, and condos are actually up 13.3%. A big part of the reason why condos are up is because a lot of new product has hit the market, and obviously it's going to be much higher than some of those 1970s and 1980s properties. So that's going to bring that value up as we continue to see more inventory. In fact, the fact that listings are down 13.8% in Mission with 25 listings showing is pretty crazy because when we started doing these market updates years and years and years ago, I used to talk about how listings were up 50% because it went from one to two. So the fact that we can see that listings have actually come down 13.8 does go to show that there's been a lot of development in the Mission market, really densifying that area with a lot more condos on the market. So we are seeing a significant jump in the overall inventory there, even though it's still only 25 listings. All right, Langley. This is an area that we've done a ton of sales in over the years. You can see Langley detached has dropped about 5.3%. It's still holding firm at just under 1.9. So it's one of the more expensive markets right now, still in the Fraser Valley. So you definitely are paying a premium if you want to live or invest in the Langley market. But inventory is up 5% to 527 detached. Days on market is taking longer to sell. Townhouses down 3.1%, inventory climbing, days on market up, and condos also down 2.8%. Days on market is increased, and a huge jump in inventory, 17%. 407 condos to choose from. It's almost rivaling that of the detached market out there. Definitely find that the townhouse market is still moving a little bit better. Obviously, days on market's only 38, so it's the fastest selling market out there. And that's a big part is that there's so many condos being built that the townhouses are the most attractive point at this time in that Langley market. Now again, we're gonna take this one. We're actually gonna like really show you the difference between multiple markets because Langley is quite diverse. You've got Langley as an average, but then you've got Langley City. While Langley as a whole is down, we can see Langley City detached has actually gone up 14.6%, which is kind of crazy to see. Days on market have dropped and the inventory is up 8.6%. So it seems like the detached market in Langley City versus Langley as a whole has actually fared better than the averages out there. And that's why I say when you're looking at these markets and you're choosing where to invest, getting into the weeds with these numbers with your realtor is really going to be important because you need to understand all these things. Are you investing in a market that's going to continue to drive down? That could be a good strategy in some regards, but maybe you want to buy in a market that has felt some depression, but you're starting to see these numbers start to creep back up because now you're going to be buying in an area that might be earning some equity for you in the long term. Whereas we can see here, townhouses are fairly close on trend with Langley, and the condos have actually fared a little bit worse, not by much, than the average in Langley as well. Inventory is up, days on market in both of those categories. Out to Maple Ridge. Maple Ridge is down 4% in the detached market right now, whereas listings are up 5.4%. Definitely taking longer to sell, 75 days on the market right now. Townhouses down 3%. We've seen an increase in days on market and a huge jump in the inventory, 67.1%. But the real tale of who is getting hit pretty hard here is the condos. Condos are down 14.6% in Maple Ridge. We're seeing days on market has dropped a little bit. Inventory's come down a little bit, so maybe that might level out if we continue to see a drop in inventory. However, condos have really taken a heavy hit in the Maple Ridge market out there, and we actually have been having some conversations with some sellers in Maple Ridge recently, and we're having the conversation where you need to be very aggressive if you're selling a condo right now on your pricing in order to beat the competition and be the one that actually sells out there. Breaking up Maple Ridge a little bit, we're going to look at West Central here versus the average. West Central, as you can see here, has taken a little bit of a heavier hit in the detached market, down 7% comparative to the 4% that the average in Maple Ridge has been. Days on market have dropped though a little bit. It's 85 days as an average. So you're looking at over like you're nearly at 3 months at that point to sell a detached home out there. But inventory has dropped over December, down 20.7%. The townhouses, though, they have held very steady, actually seeing growth of 7.4%. Days on market, though, have jumped up significantly to 80 days. So we're just under that 2.5 months right now, or just over that 2.5 months, I should say. But there's only 12 listings on the market in that area. And then condos have taken a little bit less of a hit in that area, but 9.85% is nothing to sneeze at. That's still a heavy hit. And inventory is climbing. Okay, over to North Surrey. So this is your Bolivar Heights. This is your Wally, Surrey Central area. Detached is down 11.4% over last year. So this area, these areas are definitely Surrey has really been hit hard in a lot of these areas. I think there's going to be a lot of buyer opportunities in the Surrey market coming forward. Listings are down slightly, not by much, 2.6%, but days on market jumped up 75% over last year. Townhouses also down 11.6%, growth in the days on market, a big jump in the inventory, and condos down 7.7%, 50 days on market. And the inventory is down just under 20% there at 492, but that's still a lot of inventory on the market in that area. A big part of that is we have seen some developments that have actually completed now. So those listings that were for sale at one point as assignments have come off the market, dropping the inventory, meaning that, there's less to choose from, kind of, while these people are trying to get them rented, but they're still there, really. All right, throughout the rest of Surrey, you've got detached down 7.8%. Listings actually stayed average. We haven't seen a drop. It was 0.0%, but days on market are creeping up there. Townhouses down 2%, condos down 9.1%. So again, fairly big drops in the condo and detached market. Townhouses continue to show fair because it's that missing middle. It's the people who are selling their detached can still go to townhouses. There's not a huge amount of inventory comparatively, and those who want to upgrade from condos can still go towards the townhouse market. Again, not a huge jump overall in the inventory comparatively. Okay, out to Coquitlam, 11.8% drop in the detached market there. Inventory is up, days on market's up. Townhouses down 5.8% year over year, and condos down 7.3%. Both of those have seen increases in the inventory. Days on market is up on the condos, but actually down. It still only takes about 30 days to sell a townhouse out there. Port Coquitlam, though, sorry guys, if you live in Poco, detached market took a 15.5% hit in the detached market. So you're definitely feeling a little bit of more of that pain out there. And we're also seeing the inventory has dropped a little bit, but days on market is creeping up. Townhouses and condos have both seen some positive gains. While not huge, they've seen some positive gains over last year. Inventory is on the rise in both of those categories as well. So it's a good thing to pay attention to in that regards. All right, New Westminster, up 7.7% in the detached market, down 17.7% in townhouses, and down 11.6% in the condo market. Inventory is up across the board, especially in the townhouse market, and huge jump, 425% over last year, 63 days now to on average to sell a townhouse in New West. For those in Burnaby North, down 7.7%, $2.27 million as an average in that area. Days on market is just over, just under 40 days, and the inventory is up just under 50%. Townhouses are down 3.4%, and condos down 4%. And then finally, Vancouver East. We are seeing a bit of a hit out this way, 7.8% drop in the detached market there. Inventory has stayed pretty flat, only up 1.1%. Townhouses are up 4.8%, so they've done a lot more stable there. But we have seen a big jump in inventory as well. And then condos are down 8.3%. So, guys, that is the market as it sits right now. So, what we have definitely felt really is that we have seen a lot of pressure on the detached specifically, but on the housing market right now. Prices have felt the pain in most areas, but as you can see, even Vancouver East is still showing some gains over last year. So here's where we're going to move into our real kind of deeper dive into the market, and we're going to move into our fireside chat. Now, again, if you guys are enjoying this, take some screenshots of your screen, post them on social media, tag both Kelly, Fry Team, and myself. Would love to see what your biggest ahas are. And we're going to get into the fireside chat with Kelly and I. So I'm going to bring Kelly up on the stage here. All right, Kelly, welcome to the live stream. How are you doing over there?
I'm trying not to laugh my head off with that fireside chat. What was that, AI driven?
Yeah. That was created by AI thanks to our amazing marketing team out there. So yeah, that was pretty cool, eh?
Love that.
I'm laughing the fact that you and I are still in suits while we're sitting by a fire out there, but you can see it had like a folded jacket next to me. But all right, Kelly, we're gonna dive into our fireside chat. So you and I just recently released a podcast over on my podcast channel, talking about what we're expecting to see for the market. Now, in that podcast, if you guys haven't checked that out, go over to my other YouTube channel, youtube.com/ or at Manning Up on Real Estate. We talked a lot about what buyers and sellers can do out there, and we were talking a lot more from the general. We did talk about investors, but with this being IPG, I really wanted to take that same kind of conversation and really dial it in for the investors out there so we can help them make the right smart moves out there for themselves. So if you're ready to go, I'll start firing some questions off. And if you guys are watching this and you guys have questions live, feel free to throw them in the chat and we will read them out and get Kelly and I's perspective as well for you guys. So Kelly, ready?
Ready. I haven't seen a question in advance, just so for anyone watching.
Alrighty. So first question, do you think 2026 is going to be a good year to buy, or is it a year that we should still be waiting, and why?
No, I think it's a great year to buy. I mean, I think right now it's definitely a good time to buy. I just keep thinking about Warren Buffett talking about, be fearful when others are greedy and greedy when others are fearful. And, some of the deals that we're seeing are shocking, or being the listing agents on deals and seeing where they actually land and accepted offers happen. It's quite shocking right now.
Yeah, for sure. I mean, just think about a couple of the listings that we can talk about recently. So we had a house in Surrey right now. It's officially sold, and the offers that we were getting in were nowhere near the list price, and yet at the same token, two offers came in at these offers could have been carbon copies of each other. So it's just a reflection of where buyers are feeling the market is, right? We can't necessarily release the numbers right now, but we can tell you it was a fairly decent drop, and you've been feeling it on a listing that you have in Surrey as well right now, right? Maybe you could speak to that.
Yeah, I mean, it's also not just the price drops, it's the tentative nature of the buyers. It's digging in their heels. I mean, I'm quite exhausted from a deal that I've been dealing with for the last few days. And I thought we were coming together today. We just changed one date for completion and then all hell broke loose. And I have no idea where it's going to land now.
Yeah. And that's a tricky part too, when you're navigating, the selling side of it as well, because as investors, we are less emotional, but we have to also, as investors, recognize sometimes we're going to be buying properties where there is an emotion on the other side, right? And we have to be prepared to navigate that. What do you think is going to happen with prices in 2026? Do you think that we might see some rebounding in pricing? Do you think it'll be flat, or do you see that we'll continue to see some downward pressure?
Well, it's like this, Cameron. It's a beauty contest and a price war happening at the same time. And so, I got to answer that with a few caveats, because I don't expect prices to go up. No, I don't expect them to go down too much more, except that you have sellers that think that it's 2021 or 2022, and they're asking outrageous prices for the current market today. Now, a property that is sharply priced, that shows very nicely, is going to move. And so will those properties rebound? Yes. Will the ones that are not renovated and aren't suitable? They will not. And I was just preparing for a showing tour on Sunday for an investor, and it's surprising how few good properties there actually are. Now, there is one that I'm going to show that investor, which is a foreclosure, because there is a little bit of an increase in the foreclosure market right now. And also what I'm hearing from realtors in the trenches is that there aren't many people coming to court to compete. So I thought, well, his brother is actually a contractor. Let's go take a look at this one because maybe he'll want to go to court.
Well, that might be an opportunity too. I mean, obviously, we don't have a court system like we do in the US where you're going to be necessarily paying pennies on the dollar. Our court system still has a mandate to try to get somewhat of a market value of the property. But
Yeah.
it's the key that you might actually be able to start to go to court and not compete. When we saw, courts deals, going in the pandemic height of 2020, 2021, it wasn't uncommon for you guys to go to court and face 30 offers, right? And at that point, you're not getting a deal on a foreclosure. But now if you're going in uncontested or maybe even only one other person, now's a time where you might actually get something that's, relatively well priced and has some upside when you go to court at this point. It reminds me almost of that one that you represented me on way back
Yes.
in the day when we went to
Yeah.
court uncontested, and we got a great deal on that one and turned out to be a great investment after the 5 years that we held that. So,
Yeah.
what's one big thing that you could think would actually change this market quickly? Like, what's that one trigger that if it happened, we might see a complete reversal of what's been happening in the market?
Oh, I mean, interest rate drops. You and I were both in Phoenix last week, and we heard the gentleman from the research department at the National Association of Realtors say,
Mhm.
hands down, it's not the economy, it's not the job growth, it is interest rates that drive real estate prices and sales. And so, if we suddenly, because of all the tension with Trump and this Greenland invasion and everything that's going on, I think that if there was a reaction where we did see rates drop, and there is expected rate drops in the US, they are talking about that in the real estate industry. They are expecting rate drops. So if Canada were to follow suit, then we would see quite a bit more activity for sure.
For sure. And what like right now, as investors, we're paying attention to all these things. What do you think is more important right now from an investment standpoint? The price you're paying for a home, or if you're finding a property that actually cash flows?
Okay, can you say that one more time? Is it, are you, did you,
What
I
what
sort of,
Yeah, no worries. So what's more important, right? Trying to factor in all what's going on. Is it more important for you to really get a smoking deal if you can find one that you can negotiate hard and get tons of, hundreds of thousands of dollars off the price? Or is it more important that you find something that will actually carry itself in cash flow and hold for long term?
well, I mean, you can never grind your way and time the market perfectly. If you find a good deal that cash flows, you should just buy it because
Hmm.
the fundamentals of this market hold. Sure, we face periods with, more dips like we are experiencing right now, but over the long term, I mean, there's no question. I've invested across multiple provinces, and the lesson I learned was just stay here. This is the big net worth growth province play, and yeah, if you can get cash flow, I think it'll only get better if we see even, another quarter point drop and, rents come back to increasing. Of course, we've got pressure on rents right now because the government intervention has created all this supply of rentals. We've seen all these condo developers turn their projects into rental purpose. And so and the Airbnb ban, all of these things have really, really caused the rental market to drop. But I think if we see any increase in immigration again, we'll definitely see rents bounce back. And then, of course, the cash flow will improve.
Yeah, let's talk a little bit about that. I know we talked about it on the podcast, but rents coming down. Now, you estimated rents have probably dropped on average around $500 across the board, right? More in some
Yeah.
areas, less in other areas. As investors who are existing landlords, we're not talking about taking action and buying right now. What can we do to make sure that we're mitigating our risk right now with our current portfolio, and so we don't lose too much money while rents are continuing to drop? What are some strategies? What are some ideas that you could give them?
Well, my favorite is always take pets. If you take pets, you won't have a vacancy most likely.
Mhm.
Of course, our tenants are our customers. Treat them well, have repairs done quickly for them, and have a good rapport, have good communication with them. Not bad tenants, of course, but And right now in conversations that I have with clients and other investors, you've got to be advertising across multiple platforms, places you've never tried before. You've got to get it out there every which way. And I would say, if you have to, put it on TikTok.
Yeah, for sure. You never know where a good tenant will come from. I mean, one of the other things that we discussed on the podcast, and I think it's very relevant to right now, is the conversation that investors have with us all the time of I don't want to drop my rent because I don't want negative cash flow. But what's worse? Taking negative cash flow, let's say you had your negative 100, now you're going to go to negative 250, let's say. That's an extra $150 a month. That sucks. Or sitting vacant for 6 months. What's worse?
Yeah, I mean, it's no different than selling real estate, just like telling our sellers, drop the price. We're not getting an offer. The market has spoken. Price is 85% of marketing. It's the same thing with rentals. You've got to be dropping your rent every week if you're not getting a tenant. And, I have a situation where I've got a few vacancies right now, but one of them happened in December. And I've owned this property since, I think, '07. It's a townhouse. And over the years, there's been twists and turns with the property, but it's been rented almost the entire time. And I was able to increase my rent. My tenant was there for 6 years, and now it's jumped up by at least $400 in terms of the income coming in and positive cash flow. So, you might have some short-term negative cash flow, but it's no big deal in this market.
Yeah, absolutely. I mean, we had a client. This is super unfortunate, and the only advice I could continue to give them is that if you're not getting it rented at the rent you're at, drop the rent further. Um, they unfortunately ended up being vacant for almost a year, right? So when you're concerned about a few $100s here, a few $100s there, it pales in comparison over the long time of having your property sit empty and you're paying the mortgage, you're paying if it's a condo or townhouse, the strata, the taxes, the insurance. Not only that, you'd have to notify your insurance company and move it to vacant insurance if it's going to be
Yeah,
vacant for
that's
any
a killer.
longer period of time.
That's a killer, that one. The other
Yeah,
thing that's happened to
absolutely.
me as an investor is sometimes I've had to close on pre-sales, and because I have a complicated portfolio, I've had to take B lending, and sometimes the rates were bad, like really bad. But what happens over a year or 2 years, depending on how long the term is, I find the rates have come down substantially. I don't know why. They give me much better rates after a year or 2 years. So suddenly a situation that was negative becomes positive or break even.
And that could be something too. If you've been experiencing negative cash flow for the last maybe couple of years because your rates had gone up, now might be a conversation to have with your bank or your mortgage broker. Maybe there's an opportunity to adjust those rates now if you're coming close to those renewals, and that could shift that cash flow position that you're in as well, right?
Yeah, and sometimes when you're playing within the B lending arena, there's new players that hit the scene and there's other options that present themselves. Their programs are always changing. So
Yeah, absolutely. Now, in 2026, if you were wanting to look at some deals, what certain criterias would you look at to consider a deal a safe investment versus a risky play? Or maybe let's maybe say what are some strategies that you would mark as safe in today's market versus risky?
well, if you take a look at, like, let's just say one of our listings in New West, it's across from the hospital. I mean, that is a safe play to me. Like, that kind of investment is a no-brainer. And we look at not only proximity to, well, transit, the SkyTrain, obviously, as well. So proximity to transit, proximity to hospitals, access to the highways, a good area, uh, good curb appeal. On the number side of things, I would say 3 suites, because if you have 3 suites on a house, for sure you're safe. Because if you have, two full and one vacancy, you're fine, and a little cash flow actually. Um, I would say, with real estate, when you buy good product, you will get good tenants and you will have a good resale value. So, as we've moved in the last few years into more residential sales than just investment because the market shifted, we've heard a lot of the things that regular buyers say and what they're looking for. So you want to be mindful. Sometimes as investors, when we were buying pre-sales blindly, off of printouts, what's important to investors on the return is not necessarily what the resale market wants. So you want to be careful
Yeah,
about that.
and jumping on like that and just kind of expanding, the tenants' expectations have also changed as well over
Yes.
the years, right? You know, you
Yeah.
you can't take basically a shit kicked property and expect market rent for it because, well, guess what? That's what's available. You've got all these young people who are coming up who are now getting into the market. And there's a whole study on this where it talks about the generations and how they've impacted each other. And the children who are the millennials who were raised by the baby boomers and the Gen X, they were raised in a certain household and have a certain expectation when they move out now. And then the millennials who are now having, or the Gen X and the millennials who are going to have kids, they're also going to create that level of expectation for their kids. So you can't just go and buy that property, put no money into it, and expect people to have, cracked floors or broken, this, that, or the other. The expectation is that people want to rent nice product now, right? And so it's the same with the buyers. It's essentially, you can take that same thing that you just said, Kelly. It's a price war and a beauty contest. It's the same thing now on the rentals, right? You have to have the nicest product for the best price out there to get a good tenant or get enough options for tenants to be able to choose the
It's
best
well,
tenant,
because
right?
they have choices. But there's a few things that come to my mind right now that are changes that we've seen. Firstly, big demand for EV charging now, and it's going to continue to compound, right? The shift away from 2-bedroom, 1-bath. People want 2-bed, 2-bath, and that is a problem on resale. So definitely you want to make sure you get 2-bed, 2-bath. Then during COVID, we saw the switch towards 1-bed and dens became very popular because people were working from home. And then when investment real estate was hot, we could sell those little tiny 1-bedrooms so easily. And now those little tiny 1-bedrooms, you can't even give them away. So
and when we're talking little tiny 1-bedrooms, like we're talking like the under those 500 square foot.
Yeah, 450 square feet.
Yeah. I mean, if it's under 500 and it's not a proper 1-bedroom now, they're becoming very difficult. Like we sold them all day long and they rented all day long, not even 2 years ago. Now, when we take one of those listings and we put it on the market, we're barely getting a showing. We're just dropping the price like crazy, and there's been no action on them. So that's a major shift in the buyer's attitudes. But not only that, the client that I talked about who had, it took about a year to rent, it was one of those style units too. They used to get tenants no problem within, a couple days. Sometimes there'd be no vacancy. It would switch over right away. They couldn't even rent it for a year. We couldn't sell it for about a year. They finally dropped the rent low enough where they got a tenant in place now. But yeah, that's those like 450 small 1-bedroom units. And you had a brand new unit in the Flamingo. And I mean, activity wise, like what did you get on that? Like when you put it on the market?
Yeah, very, very, very minimal. And it was a top, it was a really high floor, good view.
Yeah.
But very little activity.
Yeah. Beautiful building. Even the finishings in the suite are very, very nice. But yeah, it's a studio.
Definitely a shift right now.
Yeah. So that kind of was going to lead into another question, or it kind of goes into that safe versus risky. Then is just knowing what is actually investable right now, right?
Mm-hmm.
So those small units could be something that you'd strike off. 2-bedroom, 1-bath. Don't really look into those, right? Properties that don't have suites or are not suitable, same thing, right?
God, it's giving me a headache just talking about it. It's such a problem with detached homes that aren't suitable right now. It's the consumer wants it so badly.
And as an investor too, that's the best way. Like it's hard to make a detached home anywhere in the lower mainland Fraser Valley without a sweet cash flow regardless. So, and if you're buying like a rancher or a 2-level home with no suite capacity, as an investment, sure, maybe if you buy it with enough down payment, you might cash flow for a while. But when you go to sell those, there's that major shift in the buyers' perspectives out there, not just the investors, but everyone is looking for houses with suites. They need the mortgage helpers, right?
Yeah. Yep. They qualifying wise, it's key, and also people are stressed financially with the inflation and the increases in food costs and everything, and so they need that income.
I'm going to drop another question here, guys. If you guys have any questions, feel free to throw them in the chat. We are monitoring the chat right now. If you guys have any specifics about any cities, any strategies, anything like that, you've got Kelly Fry. If you guys are new to IPG and you don't know who Kelly is, first of all, do a quick Google search. But Kelly's been investing now for nearly 20 years at that point. She's amassed a massive portfolio. But what's more than that is that Kelly has already been through this before. Right. This is not her first rodeo when it comes to markets going down and struggling. 2008, 2009. Kelly, maybe you can because this is relevant to the market we're in now. Talk about your experience you went through in 2008 a little bit, 2009, and why that made you such a stronger investor as well.
Yeah, well, I was a full-time investor. That was before I became a realtor. And, I had bought a lot of properties. I was quite leveraged. I had joint venture partners that couldn't meet cash calls. The financing actually changed substantially after '08. Previously, we could buy rentals for 5 or 10% down. They were CMHC insured. We also could buy properties with 40-year amortizations, even on rentals. And so suddenly the whole game changed, and then I could no longer refinance very easily. I was in extreme negative cash flow, and I had to sort of like sell off what I could as fast as I could, bring in new joint venture partners. It made me much more conservative for the future. Not to say that I didn't, it took me a few years to recover. And then I had become a realtor. Income was very good. So suddenly, after having not had a steady income, made money on assignment fees and acquisition fees in different ways, I had the income to cover all the cash calls at that point. But, I didn't forget the lessons that I learned. Of course, when you go into a purchase, it's not always a good idea to go zero down or to leverage to the max. Having that equity, protects yourself. And I just became just a lot more careful. But when I recognized opportunity, I pounced on it. And I had done a lot of investing in Manitoba. I had a lot in Alberta. And over time, I've sort of sold off and sort of really concentrated everything here, just because there is so much more margin here. There is generally more liquidity than at the moment. And there was never a concern for getting renters like we currently have. But, when you hold property for long enough, you can weather a storm like we have right now. And I think it will bounce back for sure.
Now, obviously, you did mention that you did have to sell off some product at that time and liquidate some of the portfolio. Knowing that maybe some investors out there have maybe gone that route through when the market was really hot, maybe bought a lot of properties and might be struggling. At what point should a landlord consider maybe selling some units or selling some properties through 2026 versus holding? And how would you identify which ones they should be looking to sell?
Well, I just sold some properties recently. I sold some condos in Red Deer that I owned for a long time. They were just dragging. The negative cash flow was dragging. The appreciation wasn't there. I just realized, this is just waste of time. Condos in Alberta were not a good experience for me. The detached properties that I bought, I did much better on. It took a lot longer, though, than anything here that I've invested in. So when I had the opportunity to sell off what I could there, I actually could move the money into some of my investment buildings here, buy out partners, because I really feel that the long-term benefit is greater here than it was in those places. So when you can trade up to a better asset, it's a good idea to sell. If it's dragging you down with negative cash flow and it's not appreciating, I think it's a good idea to sell. And in the case, sometimes you can't sell. Like in 2008, 9, 10, I only sold what I could sell. The ones that were negative, I had to carry them for a period of time. The partners that I had to carry, I did so. But it all worked out. But I was very, running my spreadsheets every day, watching the cash flow, trying to figure out solutions every single day.
For sure. No, it makes sense. And I think that's key is just making sure that you guys are analyzing your properties regularly, right? We're looking for where those opportunities are. What has the most amount of equity, but maybe isn't performing well, because that release of equity as well could,
Yeah.
one, your cash flow might suddenly increase because you're not weighing it down with a negative cash flow, but that equity allows you to make some smarter moves into the market as well. Let's move into pre-construction a little bit. Obviously this was a big market that we invested in ourselves, as well as worked with a ton of investors in. What are you seeing in the pre-construction market right now going forward? How's it going to fare for any investor who's looking at a pre-sale through 2026? And would you recommend investing in one right
Well, I think the real game, the real play for investors on pre-sales right now is just there's blood in the streets. There are so many people that can't close that are willing to. In fact, I have one right now that I basically told them you're going to have to walk away from your down payment. I think it's 15% down. I said if you walk away from this deal and give up your deposit to the next buyer, I said I can probably find an investor who'll take it. It's in a good area, and it's a good deal at the price net, the 100,000 or whatever the deposit amount is. So for those who have money on the sidelines, just sit back and wait. And for those who can't close, there will be great opportunities to buy.
Yeah, absolutely. And I mean, even right now, we were watching, I don't know if you saw Kelly in the brokerage chat that we're in. People were posting about a new project and they put the price list and you could hear a bunch of the agents go, "Oh man, those are really expensive." I think that some developers out there have not they still haven't adjusted their pricing expectations enough to warrant jumping into this market right now. You are seeing some developers that have done some crazy deals. We saw one in Langley where the prices were actually pretty good. I think we had promoted it a few months back. So you really, if you are looking in that pre-construction market and your thought process is, well, I'm not going to be closing on it for 2 to 5 years, that'll help me ride out this market. That may be a good strategy, but you have to be very, very cautious with the type of development that you're getting in. It goes back to what Kelly mentioned before. Are you picking a location that's going to be very good? Is it close to transit? Is there a reason why people would want to live there? What product type are you picking? Are you picking the cheapest unit in the development? Probably not the best idea right now because we've seen, those studios and those small one bedrooms are having trouble renting right now. So you got to make sure you're picking the right floor plan. And then lastly, does the developer have enough incentives right now? Like there are developers who are offering decorating allowances and upgrades here that are free and this, that, and the other. So make sure you're looking at all of these things holistically. And then if you're still saying it's a really good deal, and I believe that in 2 years the market's going to rebound and I'll be able to do well on this, great, go ahead with that. However, don't just go running in because a new developer showed a fancy presentation center, because we know a lot of people have done that. They say, "Oh my god, this is a beautiful new building. I'm going to go buy a unit." And that's who got hurt coming into this market right now because they didn't buy right. Kelly, we probably have a lot of people out there who are nervous right now about investing just in general. Like there's been a lot of negativity in British Columbia about being an investor essentially. Like this industry has been under attack by governments at all levels. What is some advice that you can give to someone who may be nervous about being a landlord, a new landlord or new investor in British Columbia in 2026?
Well, I think the fundamentals ultimately are strong here. I think that we will see a change in government in the next few years because I think a lot of the moves that have been made that have affected the industry, the real estate industry, the construction industry, I think that a lot of BC people are not happy about the direction of British Columbia right now. So I think that once we see a change in government, I think that we will see improvement. It's just a question of how fast it will be. But I mean, when you're investing in real estate, you're investing for the long term. The reality is everybody wants to live here. People are going to keep moving here. Yeah, there are people moving away because the costs are high, etc. But when you compare this city on the world scene, it's still not very expensive on a cost per square foot, especially right now. It's so discounted. So I still think it's a strong play. I think that the rentals will even themselves out. The fact that all these developers have pulled out of the market in the last year and permits are probably down 40%. I think by the end of 2027, we're going to see a supply shortage that's going to start to affect us, and that will help rebound in the market.
Yeah, for sure. I think that's a big one. I mean, obviously, some of these developers have converted their buildings into purpose-built rentals, which will continue to maybe put some pressure past 2027 on the rental market side. But the lack of available inventory for purchasing, that's going to start to feel some pressure as we go in because while you're reading the headlines and we're talking about how immigration has been halted, that's not the reality. We are still bringing in more Canadians. It's just the quantity has dropped. People are still having babies. Immigrants are still coming in. They all need housing, and eventually, we're going to enter into that housing shortage again if we're not building enough to keep up with
Well,
it.
even right now when I'm putting tours together, I mean, it is surprising how few good properties there are. Like you see, okay, we're at a 10-year high of inventory. But then when you actually pick through the properties, and also what's happened in the last week, suddenly there's accepted offers left, right, and center. So the product is moving now. So there is way less to pick from.
Yeah, and I mean, we don't know for sure what it's going to be like going through the springtime. Maybe we'll talk a little bit about that. We are seeing activity increasing right now. We are seeing more offers happening. We have seen multiple offers happen on properties. Now, we're not talking multiples where it's like, oh my God, 30 offers on a property and went 200,000 above asking. We're talking like two offers came in, they're both under asking, you're picking which one's the best one. But
Yeah.
the fact that a property could be sitting for 2 months and then having two offers, it is showing the reality. We did show the slide earlier where inventory did come down quite a bit through December. And obviously we saw it. There was, I think, over 700 or something, 800 expired listings that hit January 1st. So we have seen a drop in inventory right now, and suddenly buyers are now starting to buy. We are entering that spring market though. And that spring market could potentially see a spike in inventory again. And maybe with that spike, we might see buyers take a step back. We don't really know. What's your kind of perspective on that?
Well, I do agree with you completely on that. I do caution people that are listing. I tell them get it on the market right now before mid-February because there's a pent-up demand of buyers and they want to take action. And if you wait, you're going to be competing. It's going to be a race to the bottom. But there's another trend that's happening because I was out on a showing tour in Vancouver this week, and every realtor told me that suddenly their listings were selling. They were getting offers accepted. And what one of them told me was, in the case of these two offers that he got accepted, one of them, the buyer had seen the property in September, and the other one, the buyer had seen the property in November. They sat on their decision the entire time until now before they pulled the trigger. And that's something that we're seeing where buyers are second guessing, waiting, cross-checking what else is out there, and then finally pulling the trigger. So I don't recall having seen that in the past. And so that's another trend that's happening where, it takes longer to sell listings, like because people are waiting to make sure they're making that right move. And now, of course, if there's way more inventory, they're going to take even longer to do that.
Yeah, absolutely. All right, final thoughts as we wrap up our fireside chat. I haven't seen any questions come in yet. So again, last call, guys. If you do have any questions that you want to get answered by Kelly or I, just drop them in the chat here so we can make sure we help you guys out. Of course, if you guys don't feel comfortable doing that or you want to have a discussion privately, you can also reach out to us, Kelly at Kelly Fry Team or Cameron at Kelly Fry Team. We can have a discussion about your personal situation and what we can do to help you out with that. Whether it's you're in a buying position and you're ready to start investing, you need to liquidate properties, we can help you with that, or just analyzing your portfolio to try to maximize it. Let us know. We're happy to help here. Kelly, final thoughts. We're 2026 here. We've seen an extremely slow market in 2025, and we've seen investors take a real sideline right now. They were super active during a seller's market. We're in a buyer's market. Final piece of advice for investors out there today.
Well, I had the good fortune of having a mentor who I called my rich dad, Frederick, for 22 years, who unfortunately passed away in November. And I learned many lessons from him over the years. And, he held his properties for 40, 50 years. And of course, amassed wealth beyond, what you could probably imagine would happen. I once asked him, did you think that you would end up with all of this large portfolio and this wealth? And he said, no, I just had a plan. I thought I would buy, between 10 and 20 properties and just hold them. And of course, he ended up buying all kinds of buildings. And, just one of his holdings alone was 300 units in Ontario and then all over BC. But he said things to me like, if you can hang on for as long as you possibly can. Of course, if a situation is untenable, let something go it's bleeding you too much. But so I say that to myself too in situations where there's temporary negative cash flow. Fred would say, just hang on. And every time I told him that I bought a property, he would say, that's good, that's very good. So he always encouraged purchasing. And of course, if he could see the market right now, he would definitely say to take advantage of the opportunity that's right in front of us.
Absolutely. I couldn't agree more. I mean, I think out of all the years that we've been selling real estate, this is probably one of the best buying opportunities we've seen in a long time. Like, we have not been in a proper buyer's market, at least in the last decade that I've been licensed here in British Columbia and 13 years working with you. We've had some great markets where people have made a lot of money, but true buyers and investor markets, we haven't seen one like this probably since 08, 09. So,
And I think the thing that investors have to suss out, and we sort of see it as realtors, but there's all these sellers with their properties, and then within those listings, there's people that are getting divorced, having to move, or in foreclosure. And so if you can get to the motivated ones that have to sell and ultimately will drop that price, which we've seen people drop, $300,000 on detached property, that's where the deal is. Don't get discouraged by the ones that won't move on price, because they're not necessarily motivated. They have a ton of equity. They'll say to you, oh, I don't need to sell. But for those that do need to sell, there's an unbelievable opportunity for an equity play for an investor.
absolutely. All right, Kelly, thank you so much for joining us here for the Fireside Chat again. I do appreciate all your insights that you provide to the IPG audience. And those guys who have been watching here, drop something in the chat for Kelly. Say thank you. Drop a W in there for Kelly. We do appreciate all your insights. I mean, you guys need to understand the opportunity that we have here on the Kelly Fry team to have Kelly, who's had so much experience in real estate over almost 20 something years now, is incredible. And I think that as much as we can take advantage of getting Kelly on the screen, the better, because she provides just such absolute insights. And if you guys would like to listen to the podcast that Kelly and I did recently, you guys can check it out. I just dropped the link in the chat there. So go and check that one out. It's the Manning Up on Real Estate podcast. It's just in the audio or the visual form for now. Audio will be coming out likely tomorrow on all the streaming platforms, Spotify, Instagram. And we give a lot of good insights on that podcast as well. So if you're thinking about buying, selling, or investing, definitely give that one a listen to. Kelly, thank you again so much for joining us here at IPG.
Pam, for providing this great value for everyone.
Yeah, absolutely. All right, we're gonna go into some hot deals now. So let's bring back the slides there. There's Kelly's favorite Fireside Chat. Let's dive into this. We've got two really smoking hot deals for you guys. Both of these are in the detached market, so we decided to focus on detached right now because I think that's where some of the bigger opportunities are in the market. Now, the interesting one that I'm going to show you is not necessarily one of those scenarios where maybe you have to pick it up on the buy, right? Trying to negotiate hard. You might actually have to bid on this one. And I still ran the numbers on this because it is really, really low. But the matter is that you're still picking it up under market value. And then we can help you determine that. So let's go into the hot deals right now. So the first one here is a listing in Surrey. It's a 3-suiter for under $1 million. And this is what I talk about. The opportunity isn't the fact that it's listed at $1 million. That's obviously a marketing ploy to get as much eyes on this property as possible. So pricing it low and trying to get multiples, it is still a strategy that might work for the right property. And we have seen it work recently, even in a couple months ago. So to me, that's what's happening here. Now, the key thing here is that even though it might get multiples and might sell above asking, even if you were to pay, let's say, $100,000 more for this, and that's where I ran my numbers, was at 1.1. This is still a really good deal out there. You're still getting it with, in my opinion, under market value. It's in an area where demand for rent is still going to be relatively high. And the numbers that you can see there on the screen, 28, 22, and 800 for the 3 suites, these are actual rents right now that we ran it at. So on tenancy turnover, rents may shuffle a little bit. It just depends on how long some of these tenants have been here. But this is what the numbers look like if you had to bid on this one if need be. Running it at $1.1 million, the gross rent today, even though it says potential there, it's actually today. Jury, I think, didn't take the potential part off. You've got property taxes, insurance. We put some vacancy repairs and your mortgage. You're making about $488 a month in cash flow. So yes, we are seeing cash flowing properties back in the Fraser Valley. In fact, this is Surrey, not too far off of the Port Mann Bridge. So it's a great location. And there's a lot of development that is happening over time. So this would be a potentially a really good hold project for you as well. Down payment, this is factoring in only 20% down. So we're not having to go to the 25 to make something work. Total investment is around $242,000. We used a 4.5% interest rate, which is really actually a little high for what we're seeing most people get on the market today. So we're trying to be very, very conservative. If you were to get this thing maybe at 1.0, like, or sorry, 1,050,000, and you got a better interest rate or any factors of those, that would just increase your overall cash flow. So we're trying to be very, very conservative on this number right now. And this is then obviously going to generate you a 2.4% cash on cash return. We haven't seen C on C returns like that in a long time in the market. And obviously, we're factoring in return on equity, and a 3% modicum appreciation gain gives you about 21.88% return on investment. So, again, the fact that we can find listings for detached with 3 suites under $1 million in Surrey right now kind of blows my mind. So it is showing that there are some opportunities for the right investors who can jump on it. Now, I put 1.1 to be conservative if you really had to bid up. If there's not a lot of bidders, or even if there's no bidders and you can pick it up for $1 million, that becomes an even better deal out there on the market. This next one is a brand new property out in Mission. Again, Kelly mentioned looking for 3 suites. That's what we did today, is looking for those properties that have 3 suites out there. This one's brand new, so it's got a 4 bedroom up, and it's got a technical 2 bedroom suite, but there's a media room that could easily be converted into a 3rd bedroom. So we ran the numbers based on doing that, because as investors, we want to maximize the cash flow, right? So we convert that media room into a 3rd bedroom. Now you have technically a 7 bedroom house with a 1 bedroom coach house. This is a legal suite and a coach house, 3 suites total. Running the rents based on where we feel the market is right now, you get about 3,100 for a brand new unit in Mission for 4 bedrooms up. About 23 if you can get that 3rd bedroom set up. It would be lower if you did the 2 bedroom. That's why maximizing what this building can do would be paramount as an investor. The 2,300 and that 1 bedroom coach house for about 1,500. This is how it breaks down. Again, we have factored in the listing price to include GST. Now, this one's been on the market for over 115 days. So while it's listed currently at 1.3, there's no reason you'd have to pay 1.3 in this case. You could definitely negotiate this down. Maybe you got 25, 50, or maybe even $100,000 off on the price. This is one of those scenarios where you can get creative and start to bid, which will only impact your cash flow positively going forward. So factoring in the GST, or maybe that's a negotiation too. Maybe you can get them to factor in the GST into the price. There we go. We start thinking like investors, get creative. Property taxes, we estimated around $5,500. We don't know what the taxes are yet, so we're just making an estimate based on the area. Insurance, vacancy repairs, and your mortgage, you're looking at just under $500 a month cash flow. Still using a 4.5% interest rate in that regards. And obviously, you've got your down payment, your property tax, legal, everything else like that. And this is generating a 20.91% return on investment. So, as you can see here, properties are back to being cash flow when you find the right combination of suite potentials to price to rent. We haven't seen markets like this since probably 2018, where we could see this strong of cash flow. 2019, the cash flow was getting pretty weak, and by 2020, it was all but erased in most markets. That's why there was a big push for the pre-sale markets and things like that. So again, lots of opportunity that we're starting to see in the market. If you guys have capital that you're sitting on and you're ready to start making it move, hit us up. Let's talk about what strategies you would like to do. Let's make sure we put you in touch with the right power team so we can start building your guys' wealth in BC. That about flips it out. We've got some QR codes that will pull up on the screen so you guys can follow us on a few other things. If you guys want to follow the Kelly Fry team, check us out on all of our socials by scanning here. This will bring you to everything that we have. That includes, YouTube, Instagram, Facebook. And I got to just say, have you guys been enjoying? Drop it in the chat if you've been following some of the videos that we've been putting out, Kelly and I specifically. Have you guys been enjoying some of those comedic ones? Our marketing team has been absolutely killing it with some of the videos they've been doing. So drop a W in the chat if you guys have been enjoying the stuff that Jury is making us do out there on social media. We are having a lot of fun with that. So if you guys enjoy those, we'll keep doing those. Of course, subscribe to this channel here so you can catch all of the replays of these events, plus be prepared for other content. I'm dropping a lot of YouTube shorts right now on this channel, as well as we have all of our live streams coming up. We have some plans going into 2024 to continue to make as much content as we can to help you guys as investors stay ahead of the market. Of course, the Manning Up on Real Estate. If you want to keep in touch with the podcast, this will take you to the audios, and this here will bring you to the actual YouTube channel for that one. Again, right now we just dropped that new one with Kelly, doing that deep dive with her for 2026. This is really going in deeper into our predictions for what the year is going to bring. So check that one out. That is the thumbnail there. So should you be buying in 2026 or not? And of course, we have our community on Facebook. So we would love for you guys to join us on Facebook. This is where we post what's going on for the IPG group. Of course, if you guys have any questions, you guys can always ask them in there as well to get responses from the community. You guys can post deals there if you're looking for JV capital, anything that you guys would like to do. Let's really try to build this community up online and support each other. And with that being said, mark your calendars. Our next meeting is going to be on February 12th. We are starting to use Eventbrite to help market this a little bit more. But if you guys go to the community Facebook, the Investor Performance Group on Facebook, that's the best way to stay in touch with when we're going to be doing these. And again, they'll be live streaming here on YouTube. Last chance, drop that subscribe if you're not already. Guys, thank you so much to everyone who was tuned in live with us today. We do appreciate all of you guys as always. And like always, we are here for you guys to support you in your growth as investors here in the Greater Vancouver and Fraser Valley area. But more than that, all over Canada. If you've got properties across Canada or you're looking to invest across Canada, we have great investment agents that are everywhere and power teams. So let us know where you're looking to invest. We can definitely help you out with that. And with that being said, thank you guys so much for watching in tonight. We'll hope you guys have a great rest of your week, and we'll see you guys on the next one.